All right, so you are welcome to basically our second major meeting to discuss audit and assurance. And so today my focus will be to tackle the main question envisioned to be your first question in the exam, and it's focusing on ethical and professional consideration. Okay, so some of you have gone through it already. That's why you were able to do some of the assignment. But we are looking at it today as a class again. So professional consideration. This is a compulsory part of your exam. It is the beginning of audit, so you can't dodge it. It is a compulsory part. Now, we all know the IFAC Code of Ethics. We mentioned it the last time. So you said copy, where we talked about integrity, objectivity, professional competence, and due care, confidentiality, and professional behavior. So what I realized in some of the assignment people sent me was that they used these ones to solve the assignment. These were the ones they used. You don't actually use these ones to solve ethical questions unless it is a corporate reporting exam. In corporate reporting, the ethical issues are solved using the IFAC 5 Code of Ethics, the 5. But when you are doing it in audit, your focus will be on the threats to get the balancing right. All right. So now, if you are answering ethical issues, if you hear discuss the ethical issues, explain the ethical issues, you see it in the question, ethical issues. There are basically 4 things you are looking at. You are going to look at the applicability of SSAFI. And when I say the applicability of SSAFI, you are going to look at self-interest, self-review, advocacy, familiarity, and intimidation threat. You are going to find out if they exist in the question so that you can call it out as your ethical issue. So whichever one that is applicable, you call it out. And I'm going to show you how you write your answer, because I also realized that in how the answers were done in the assignment I gave. Now, apart from that, number 2, there is an issue of confidentiality. And I'm going to explain to you when we apply confidentiality, because I also realized that one too is another issue. When do you apply confidentiality? So you see, if you are to use the IFAC 5 Code of Ethics, confidentiality is already there. And so the only one that you can single-handedly pull out is already, all those things amount to threat to objectivity. So if you use those ones, you are just saying one point. That is the danger. So here you see the applicability of SSAFI. You look at instances where there is confidentiality. We'll talk about when to apply confidentiality. Then number 3, the third thing that you should be able to spot is also what I call I of C or C of I. So I of C, C of I, any of them can be 3 and 4. So we have, let's say, C of I simply means conflict of interest. Now, the conflict of interest, if you don't take care, you apply conflict of interest to a self-interest or a self-review. Be careful. It is not so. There are instances we apply conflict of interest. So it's different. All right. So then the last one under ethical consideration is I of C, integrity of client. So these are what you are going to look out for if they are in the essay or the case that have been presented to you. All right. So that is that. Then when we are done, that is when I'm done with this first part, we take our break. Then when we are done, we come to this side. Then we are coming to now talk about professional considerations. Now, in the professional consideration, we will be dealing with number 1, money laundering. It's been a while it came in your exam. Money laundering. Then number 2, we will be talking about auditor's liability and professional competence, professional skepticism. So we will be looking at the auditor's liability and professional skepticism. . Then the third thing that we will be looking at will be practice management. Practice management. And practice management, we will be looking at how to obtain a client and how to maintain a client. All right. The fourth thing that usually comes in here has been separated now to have its own mark. And we considered that the last time. It is called corporate governance. All right. So these are the issues. And the part of the corporate governance probably I'll talk about today was the interesting conversation we had the last time. It was a very interesting conversation we have. So that is the only part that I'll focus on today. So these are what you are going to do. So if the question says highlight the ethical considerations, then it means focus on these things. If the question and these professional issues are brought out as questions on their own, this one, whether you like it or yes, it is coming in your exam for 10 marks. Then any of these, combine any of these, this one too, from what we did the last time, it is compulsory in your exams for 10 marks. Get ready for that. Then any of these, a combination of any of these, so another 10 marks. So you don't have a choice. You don't have a choice. So as for this area, it is very, very important. Very important. So now, let's break into the sessions. Let's start with the applicability of the SSAFI. So we look at ethical consideration. Number one, the SSAFI. In fact, some other tutors may teach the SSAFI, adding M to it, calling it management impact. I don't, and I have my reasons. All right. So now, what are we going to look at under SSAFI? You've already heard from me that the first S is self-interest. The self-interest rate. Now, what is a self-interest so that you will be able to apply it in situation that you need to apply it? All right. So now a self-interest rate is, so when you read the case, the time that you see its applicability is when the auditor could in any way benefit from financial interest in client. So the issue here is that you are going to gain some form of financial interest in the client business. So, ladies and gentlemen, at this point, if it is not a financial interest, sometimes we say some other interest, but most of the time we are talking about a financial interest. If it is not that, don't try self-interest rate. So what is your interest in the business? Maybe sometimes it may not be financial, but you want somebody to do well and that person is connected to you. So we call it emotional interest. All right. So basically that is that. These are the period you apply self-interest rate. Now, the thing is that it is a threat because it may impair the independence and objectivity. Now, this statement that I just made should always be part of your answer. When you spot the threat, then you make that argument that it will impair. If these things happen, it will impair the judgment. This statement must always reflect in your answer, judgment and objectivity. That is why it is a threat. So you may not use impair. You can say that it will affect or influence or those kind of words. All right. But at the end of the day, that line must come in your answer. So what are the situations where you can find in the question that will let you know that, this is a self-interest threat? What are some of the situations you are likely to encounter so that when you see them, you will know that, oh, this is a self-interest threat? So those are what I'm coming to show you now. So let me draw a table. And I know some of you have been asking for notes and this and that. All you need to do is to revise the video. All you need to do is to revise the video. All right. So now, I'm going to give out about 10 cases where self-interest is applicable, all right? So the first case that I'm going to apply, we're going to discuss it. And when we discuss it, we talk about the safeguard too. So the first case of its applicability is when you have a financial interest. When you have a financial interest. All right, a typical example. So I'm going to use this page. So this is the issues. And I will discuss examples here. Then what I will do here is to discuss the safeguards, because it is always part of the answer. What can you do to safeguard that issue? All right. So basically that is that. So let's look at the financial interest. A typical example is when you, the auditor, you own shares. So let's say, so owning of shares is a typical example. All right. So let's talk about that. Now, of course, and other times too, there's a dashing movement like that. They will give you some sort of, and we'll come to that, gifts and hospitalities. We'll come to that. Now, you have the auditor going to audit somebody, and the auditor owns shares in that client's business. Now, these are the issues about the safeguard. According to the code of ethics, it says that there are 3 people who are not allowed to have a direct interest. In fact, I normally add 1 to it because that one is normally silent. These 3 or 4 people, 3 or 4 people are not allowed to have a direct interest. Direct interest means that you are the one putting in the money, you the person, all right? And so these are the 3 people. Number 1 is the assurance firm, i.e. the audit firm itself. The audit firm as an entity can have an investment, and this investment should actually not be an investment that you are doing that is inside the client's business. No, it is not acceptable at all. You cannot do that. You are not allowed to do that. It is actually not acceptable. All right, so you can't do that. So that, take note of that. All right. Then another category of people is a member of the assurance team. Member of the assurance team. So member of the audit team. So if you are a member of the audit team, you are not allowed. Then not only you, immediate family member of this, any person in this team. So we look at this team, then any immediate family member. Immediate family member. Then the last one I like to add is kind of other partners. All right. So the partners and their family relative and their family, their immediate family. So when we say a partner is the one who signs the audit report. All right. So basically that is that. All right. So a manager of the audit firm, these 3 people or 4 people are not allowed to have a direct interest. They themselves investing inside the client business. When it happens like that, please, there is no safeguard that apply. The audit work must stop. You can't do the job. No safeguards apply. But what if there is an indirect interest? If there is an indirect interest, then what you need to do is to assess the indirect interest. So here is direct. Okay, so what if, let me give you a typical example of the indirect. We all do tier 2, don't we? Or we all do investment, EDC, EcoBank investment and things. We all do that. All right. Now, let's say I put my money in EcoBank EDC, an investment package. All right. Richard, kindly mute yourself, please. You are giving us feedback. All right. So let's say I put my money in EcoBank EDC. EDC. Then EcoBank go and use my money to invest in a limited real estate. It's a real estate. So real estate. they use my money to go and do that. Then I am the auditor or a member of the audit team or with any of these ones. So we have it like this. And now, oh, Richard, please mute yourself, please. All right. Hey, why I mute you, then you unmute yourself back? Why? All right. So now, so let's say in this case, the auditor now is now going to audit this company. So the auditor who invested his money in EDC, and the EDC EcoBank company decided to go and invest the money here so that the returns will come to this auditor. Now, you, the auditor, you are now auditing this company. So you see that this one is a little bit dicey. Now, in dealing with this kind of issue, what you need to do is to assess the level of this person. So is it the audit firm itself as an entity that is doing the investment? Is it a member of the audit team, or is a family member, or is a partner? So you have to assess the issue. Now, let's say I am just employed in an audit firm, and hey, this Richard person, you are.
So I suggest you take him out for him to rejoin.
I hear you.
Put him in the waiting room.
All right, thank you. So now, what will happen is that you, the audit, this is interesting. All right. So assess, when you have this scenario in the question, kindly assess the position of this person. So let's discuss this. I am just employed into an audit firm as an officer. Like my good friend in Deloitte. I know you have gained some promotion, so you are not a small person anymore. And so let's just use when you started in the Deloitte firm. Now you probably might join a team to go and do audit. You just started, but in that team that you are in, the company that you are going to audit is this real estate company. But you are just an officer. Guys, do you see this one as a threat? Is it a threat that it can affect the objectivity of the audit?
No.
No, why?
It's a threat, but minor.
It's a threat, but minor. Okay, yes, the person who said no.
Please no.
Explain now.
Sir, because at the end of the audit, there will be a review by the senior or the senior most to review what the officer has done.
Okay, yeah, that is true.
And also, it doesn't have an impact on the final report.
Yeah, so those are some of the tricks the examiner does. Clearly speaking, whatever this person does will undergo a supervision by his supervisor. All right. After that, it will go back to the audit manager. All right. So it looks as if, like somebody said, it's very, very minimal, even if. So in this case, there is actually not that much of a threat in this particular issue. But assuming that it was a big person in the team, the supervisor himself, somebody other than the supervisor, maybe the partner himself, then it means that what you are going to do is to actually dispose of. So even this minimal one that we are talking about, I mean, you could see that one, you have to find out, what I'm saying, that you have to find out if the person what the person is doing, in this case, this officer, has a significant impact or a material impact of influence. If it is, then what you are going to do is that you are going to ask them to dispose of their interest. So you let them dispose of their interest. Not only that, after you have disposed of your interest, you have to be removed from the team. Not only that, after you have been removed from the team, hold on, let me finish. Any work that you did, that person did, that work should be reviewed by an independent person. So these are the 3 steps. So review of that person's work. All right, so now you can ask your question.
Sir, good evening. Please, when you say dispose of interest, what does it imply?
Sell.
Sell so the auditor will sell its shares it has in that company, that entity.
Yes.
And after he had sold the share, the auditor also will be removed from the team.
Of course.
Okay. Then it will be reviewed the work. But once he has been removed from the team, does it necessarily should his work be necessarily be reviewed because he has been reviewed and he's not working with the team?
No, I don't think you heard what I said. Any work that before he was removed, he might probably have done some work.
Okay.
That work that he has been done should be reviewed.
Okay.
All right. So basically, that is that. All right, that is that.
Sir,
yes, please.
Please, is it not unfair to the auditor if he will be removed and still have to sell off his interest?
So as for fairness there, it's a matter of subjectivity. So yes, we can sit here and say it is unfair. But do you know if they are there and whatever, I get your point. So maybe he has disposed of, so you say he should be in. If you are forced to dispose of something that you love so much and you are still there, what do you think you will do? And so I get the moral, like sympathy kind of thing that you want to show, but what if what he does affect, like he's going to give an opinion, somebody is going to give an opinion. At the end of the day, if he does something that affects the opinion, it affects masses. And if you want to recount the effect, yeah, it's plenty. So kill 1 to save 1,000. Fast connection. So basically that is that. All right. But I like your question. I like it. It means you are thinking. All right. So that is that. So issue number 2 we want to discuss is business relations. Business relations. Ima, you can ask your question.
Thank you, sir. Good evening.
As part of
the safeguard, as part of the safeguard, can you also inform those charged with governance as the audit committee?
This is you doing external audit. I don't understand.
Yes, please.
You are informing the company that you are auditing, that you are taking somebody of your own team.
Per the interest, if it is from a supervisor point of view.
This is
the audit committee might know, or the board might know the various investors within the company. So
there is no
probably
need.
if you also want the audit, okay.
There is really no need. You are the audit firm. You are taking your safeguard. You don't report to those charged with governance. You are appointed by a shareholder as an auditor. So you don't need to subject yourself to whatever you are doing, subject yourself to the board of directors of the client. No. You don't really need to. So I'm writing the issues here and we discuss them quickly. Always, this first part takes some time. Yes, Francisca. Francisca, your hand is up. I'm waiting.
Hello, sir.
Yes, I'm listening.
Sir, please, what if why don't they before the engagement, why don't they say what the company does or everything? You should know everything about the company so that those who are going to those who are going to audit it, they will say that, oh, okay, I have interest in this particular thing.
That is
So
exactly what we are doing. It doesn't mean this thing can be done before you go to that company's office, or you may be there and you will discover, so you remove the person.
okay, all right. Thank you.
All right. So I have plenty issues that you can spot in the exams concerning self-review. I have even more than 10 because once as I'm writing, it keeps coming. So I'm talking here. This one is loans and guarantees. I think this one is a nice one that we use more of times. All right. So this one, the last one, serving as director, is what people call management impact. Yeah, on the board. That is what people call management. All right. So now let's discuss them quick. All right. So you will tell me which one you saw in the assignment that you did. Which one of these issues you saw in the assignment that you did. Now, let's look at business relations. We are looking at a situation where the audit firm is in business with the client. Sometimes it is a big business. Sometimes it's a menial business. Sometimes it's just a supply. So let's say a typical example is, let's say you are auditing, what do they call them? Kingdom Bookshop, right? Kingdom Bookshop. So audit firm is auditing Kingdom Bookshop. But Kingdom Bookshop is the person that supplies the audit firm their pens and their papers and all those things. All right. In any case, you are not supposed to deal with any business relations, hold a joint venture or any kind of thing with the client that you are doing. If any of the team member is in that, then it means that you must take him out. All right. But let's look at a situation where, let's say, the audit firm is auditing Kingdom Bookshop. But Kingdom Bookshop is the same people who supply the the audit firm, all their books and stuff. Then what is going to happen? It can impair the objectivity of the audit. So what do you do? What you do is that you have to assess the kind of relationship. Are the transactions done in an arm's length? I think by now everybody knows arm's length. Arm's length or at fair value? Yes. If the question is yes, then there is no problem. If it is not, then there is a problem. All right. So somebody said that since the itinerary for the year will be out to the auditor to declare their intent of conflict of interest. Yeah, this is what is done in the audit firm, actually. So you know the companies that you are going to audit. So the itinerary will be out. If you know you have an issue in one of them, familiarity, self-interest in any of them, then you bring it out so that we position you well. You can't be part in an audit team where your father is the accountant over there. So in the company that you are going to audit. So you can actually do this thing prior to. All right. This is what the big firms do anyway. That is what they do, but not all of them. Yeah. So that is it. So back to this one, you have to assess if the transaction between their business relation is at arm's length. All right. But if it is not an arm's length, then it means that there will be threat to independence. And so therefore, what is going to happen is that you should be removed from the team. You should not participate. All right. You should be removed. And anytime you say something, somebody should be removed, you have to add that an independent review must be conducted on any work that is done by that person. All right. So that one there, you have to always add. All right. Okay. So somebody says, yes, that is what is done in my company before we grow. Yeah. So big firm does that. Most of the big firm, they do that. All right.
Hello, sir.
Yes, please.
Sir, please, can a review be done by the senior partner?
Oh yeah, a review can be done by the senior partner, because the partner doesn't really come out. He will not be part of the team. Supervisors go along with the team. Partners don't go, they don't leave office like that, unless it's a big issue. No. They don't leave office like that. Go and, if you have spare time, go and watch the movie titled Suits. You will love audit work and legal issues. Yeah, you will love it. Yeah, so please,
So
this
please
is
explain.
suit, like normal suit you wear.
Okay.
Yeah, it's a very nice movie, very, very nice one. All right. So this is the issue. So check if there is an arm's length. If there is no arm's length, like I said, you have to be removed and a review must be done. All right. So that is that. And employment. So my good friend who is saying they do that in the office, you should tell us if you have been tried. You see, poaching is the word. It's not really like employment like that. It's poaching. You see, the audit firm, especially the ladies, they dress well, Papa. Presentable, nice, presentable. They are dressing very professional. Now, anytime they enter offices, the guys in those offices are alert. Oh, they are always alert. We will talk about that in familiarity. But what you also see in there is that when the entity wants to corner you in a way, they will ask you questions like, oh, you are doing a good job. Like you are doing a good job, or a good audit officer. We need an accountant. Now that you are auditor, you know a lot. Me, I am those who are against auditors. You people, you know, there's nothing you know, But yeah, what can we say? Because you are coming from audit firm, it looks as if you know Biama. You don't know 10. I've said it. Then what happens is that the company, you see some people, manager in the company, like, oh, you are doing well. We need an account person. We can employ you and all those kind of things. They are trying to just poach you. Sometimes it's genuine, sometimes it's not. All right. Yes. Because people think auditors are clever, man. Well, they let them come and sit in your firm and start doing the trial. You realize that they just came and they were assigned to inventory. So only inventory was the one they are doing. They don't understand really the entirety of everything. Yes, it takes some of the supervisors who have been in their work for long to kind of have an overview of all the phases of the financial statement. But somebody come, you give him inventory. Some of them is doing payroll. The fact that they are doing that doesn't mean they are deserving accountant. Yes, but it happens. In the real world, it happens. It looks as if you people know Biama, Master. You know thing. Maka. All right. So that is what happens. So they will try to kind of see if they can employ you. Now, when that happens, your safeguards are that that they are trying to poach, you must inform your entity. So you must inform your big boss. You must inform your firm that of such potential move. So that is that. Communication is one of the safeguards. Now, when you inform them, the next thing to be done is that your supervisor or your team lead must remove you from the team. Simple and short. Because they are trying to go into your mind. And anytime, like I said, you have been removed from the team, the next phase is what? The last thing to do is what? Yes?
Review by
What then must be subject to be.
Good. So the communication, removal, and the review. All right. So that is that. So that is potential employment. So that is the issue there. Then we come to recruitment. Sometimes the audit firms recruit for other companies. So even I've had PwC always sending me, because I applied for one time for a job. Every 7 days they will be sending. Every 7 days they will be sending. So I had to unsubscribe because I've decided not to be working in these offices anymore. Now, so when you are an audit firm who recruit for people, the thing is that the person you are recruiting for another person, and this was it was in the assignment that I gave you, if you guys check. Now, you are going to recruit for somebody. The person you are going to recruit for the client should not be in the position whereby he will be making a management decision. So be careful of that. So he should not be in a position where he will make a management decision. All right, so that is that. But anyway, they could be involved to review a short list of candidates, all right, so that they can draw the client's attention to some of the criteria. But they cannot employ some people or people for the client, whereby that person is going to make a management decision. So I'm going to mix this one up with the last point, like serving on the board of directors. You see, if you employ a director for a client, it means that the director is going to be part of those people who make decisions for the entity, and you are the auditor going to audit those decisions. What do you think will happen? You are the same person who brought the person. The person made a decision. You are the same person going to audit this thing. If you go there and you say that, oh, their decision is this and this and that, do you know what the client will say? But you are the one who brought him. Yeah. So because of those kind of issues, you must not, give employment or recruit for an entity whereby that person will be in the position of a management interest. As a matter of fact, if you are a public interest entity, the safeguard or the code says that, number one, you must not search, all right, or provide services in this way. You must not search for a candidate for a position of a director or a senior manager. And you must also not be part of their reference. And this my referees, so and so. No. It can't be. So you can't do that. But let me add, when I get to the last bit, so let me even complete this one with this last one. So you are recruiting to let the person serve on the board. You see, the safeguard says that we just said that you must not recruit for somebody whereby the person will be making a management decision. And that is where some people call it management impact. So instead of the SSAFI, they add M to it and call it SSAFI. Now, what this one means that you cannot employ a director to serve as a board, or you, the audit partner or anybody, you cannot serve on the board of the client. You cannot do that. So when you see this in the question, flag it out. However, you can serve on the board as somebody whose work is just administrative. A typical example is the secretary. All that they do is to type board minutes. That is what they are doing. So if the work is administrative in nature, then fine. But other than that, you cannot be part of the board in making decisions. So please, I hope you have heard carefully. Yes, Ima?
Hello, sir.
Sir, that's where I was coming up to with respect to management threat or management decision. If you end up probably appointing person A, person B for them, the recruitment search we did, we thought Peace is okay, we thought Esther is okay. You've made a management threat. Now I wanted to confirm that one, but you've said it, please.
All right.
Thank you.
That is that. All right. So now, that is it. Then I'm going to talk about these ones. These ones are very interesting. I had to do the same thing with my UCC students. Now, these ones, they are fees. They all embody fees. Now, what is lowballing? Lowballing is quoting a significantly lower fee just to be able to catch the client. So I always say that my experience is with the masons, the building masons. So growing up in the society that I was in, that was a popular job. So everybody is a mason contractor. And we were doing we were constructing a building, a family building. Then we wanted a contractor. So one contractor charged a price. So let's say here he charged 50,000 and to do the building. Then another contractor said he would charge 30,000. So my mother said that this guy, like his mouth is expensive. That is what that means. like he's quoting higher price. Then I happen to actually, like I said, it's a societal something. So if you finish senior high school, you don't have anything to do. It's a normal thing to do a labor job. So I used to join this contractor to do labor job. What we normally do is that if you are mixing sand with cement and doing the mortar, this guy will make you take 4 wheelbarrows of sand, then put in 1 bag of cement. So that is the practice. That is what we used to do. But my mother chose to go with this guy because he says that this one is expensive. And because me too, I've been doing the labor job, I had to be part of this work too. And what I realized this guy was doing was to do 6 wheelbarrows, 1 bag of cement. That was what he was doing. So what has he done? Basically, what he has done is that he's kind of doing a shoddy work. And he has charged a significantly lower price just to throw my mother off not accepting this guy. It happens. And even in this Accra stuff, people do that a lot. Yeah, people do that a lot. Me, I always say it happens everywhere in any of the services. That is what happens. So that is what we call low balling. You charge a significant lower price just to get the client. All right. Now, low balling, what you must understand is that there is no safeguard to low balling. It is actually abolished. You are not allowed to do that because the audit work is actually based on records, time that you spend on the job, and you need quality control. So you will be maintaining records of the time that you spend on the work. That is why if you go on a job where you need to pass so many audit adjustments, the audit fee is high. It's very, very high. Those of you who work in an audit firm, you can attest to that. I have been in this scenario so many times, so many times. I kind of work with an audit firm, all right, at the same time doing my own stuff. So I'm part of an audit firm and my job is quality control. I'm their quality control partner. Yeah, so that kind of thing. And these are the issues that comes in there. So you realize that when there is so much to do on the work, then there is so much also to collect from the client. So you cannot be using this low balling activity. And it is very subjective to determine whether this thing is a low balling or not. It's very subjective. But you read it in the exam, you see it a clear statement there. You feel it. You feel it in the thing. So all that you say is that low balling is abolished and must not be practiced at all. Work must be done with quality and time documented. So the time you spend on the job is documented. Yeah. Seram, is that the name? Seram, your hand is up. Seram, your hand is up. All right. Whilst we wait for Seram, let's talk about fees. The fees that you charge.
Chair said.
Yes, please.
Said that we should, in an exam condition, we say that work must be done without something. Said.
Oh, I mean, you must document the time you spent on the job, and work must be done with quality. All right. So qualities, ensuring quality standard. All right. That is that. So let's talk about the fees now. There is a 15, a greater than 50. Yes. Anyone? Any question?
Yes. So say, for instance, you've been given the contract to execute, and then on the face of the contract, you didn't know the scope that they gave you. You went to the field and realized that it's not what they've been giving to you. So therefore, you have to spend much time on it. So that one, you increasing the price, that also constitute lowballing.
Increasing price is not lowballing, but you charge low, and you per what you are asking me, it means that you didn't do audit planning. You didn't plan well, because before you do the work, you must plan, and it's something we will discuss. You must plan to know the risky areas, and all these things must be done before you even move out. So your planning, if your planning is wrong, then it means that you did shoddy planning. You went there and you were shocked with the thing, and you now want to increase your price. That is why later on we will learn something like the things that must be in the engagement letter and the things that may be in the engagement letter. If you want to put the fee in your engagement letter, then you must stand well. Some clients will tell you agreement is agreement, you Shatawale type of client. Yeah, so you have to be careful. iPhone, you don't have a name. Your hand
No,
is up.
it's Aram. I was having issues.
In fact, you still have the issues. So maybe you might have to type your question in the chat.
Oh, that's
Or
sad.
go ahead. Go ahead. Let's see. It's better
Can
now.
is Hello, can you hear me?
Yeah, go ahead. We are listening.
Yeah, so I wanted to ask regarding the point on you mentioned the auditor cannot serve as a director of that company. However, they can serve as the company secretary. So I just wanted to ask that because I think in the Companies Act, the roles of a secretary, I don't know whether it's only defines a company secretary as someone who performs only administrative duties. Because I think in some parts of it, it states that the secretary is responsible for doing the filings, statutory
That's
filings
still
of the
administrative.
company.
That's not a decision making. It's still administrative.
So it's not a problem for the auditor to be doing filings for the company.
It's not a problem. It's not. Actually,
Okay.
they do. It's
Okay, well, they do
administrative work.
filing.
Yeah,
Oh,
they
okay.
do. It's an
Okay.
administrative work. It's not a decision. It's like you see. Let me in P. Who you suma for? You suma. You are a boy. So that is it.
Okay.
Let me brand it well so that you see that the secretary is a the secretary is a boy sort of or girl like that kind of thing. That's what is done in my company before. Okay, so I thought so.
About say sometimes the secretary make management decision in some companies.
Yeah. So then then she can't serve on the board if she is a direct. She is coming from an audit firm. It's not allowed.
But I say, can a
So
corporate body
what does he do? The secretary, like when you say he's making management decision, what as the secretary, what does he do? Because me, I've been on board before. They are busily typing, They are busily typing things, and like she also said, filing stuff for the entity. What input do they bring in? In fact, for them, they can't. They must stick to what they are meant to do and do a proper recordings of the issues. Yeah, some even put phone there, then they record my own. She put phone there and will be recording when she gets home, then she now types, transcribe the thing into words. That's what they normally do. All right. Yes, but if you have any other question, you can. Hardly do I see them like being part of the management. All right, so let's discuss the 15% rule. You see, when you have a situation where, and here we are looking at public interest entities, we are saying that the charge that the auditor will charge the client should, if it is more than 15% so let me position it well. So let's say this is the client, all right, because normally students ask me this question. So let me clarify it. This is the client, this is the auditor or the audit firm, all right. The audit firm is going to work for this client, charge him. So we are saying that if the charge that he will charge the client forms more than 15% of this audit firm's total revenue, then there is a problem for 2 consecutive years. There is a problem. Why? Because if one client alone serves you 15% of your total revenue, what will you do? What do you think you will do to the client? Is it not worship you, worship the client? Is it not worshiping you, worship the client? Can you hear me? So, because somebody said my voice is low. Can you hear me?
I can.
Yes, please.
Yes,
Yes. It's
now
loud and
it's
clear.
Yes,
All right.
sir.
So that is that. So if it is more than 15% of the total revenue of the entity, the audit firm, then it means what will be done is that there must be a disclosure. So now, this is where the question, I think, was it Emmanuel? I think this is where the question you asked me is probably applicable. This is where you disclose to those charged with governance. You disclose it to those charged with governance. Then, because of that, what is also going to happen is that a review must be done on the job that the auditor did. So these are the 2 things that we discussed there. All right, so that is that. If you have a question on that, you can ask. Overdue fee simply means that you did the work for a client, he didn't pay you, and therefore he is owing you. So if you are coming to do another job for that same client, in Ghana, it is like that. We experience this thing a lot in real life. Oh, somebody owes you, he said that, oh, you do a top-up job. I'll combine the 2 and pay you. That kind of thing. We see it all the time. But in audit, the safeguard is that you must actually collect your money. You do not do any further work until you have collected your money, or you have agreed with the client a payment arrangement for the outstanding fee. Other than that, please, you don't do another job. So basically, that is the safeguard. Then we have contingency fee. Contingency fee simply means conditional fee. If the job goes this way, I will pay you this way. If the job goes this way, I'll pay you this way. Please, especially tax audit. If GRA catches you, you can pay me this. If GRA does not catch you, you will pay me this. Please, contingency fee is also abolished. All right. So if you have such situation, you must drop down the job. Don't even do it. Some people also say, do a non-assurance engagement aside the main assurance engagement. If you do, like sometimes you hear in the case that the CEO wants the auditor to do his personal filing as part of the job, and he will pay everything using the company's money. Please, you don't do that. You don't do that. All right, so it's abolished. This is the one that I love, gifts and hospitality. My good friends who are in the audit firms, when you come to our offices, you are expecting us to buy you lunch. You always do that. Everywhere
Yes,
you
sir.
go. That is
Yes,
what
sir.
you people you are always expecting that. Now, this is the issue about gift and hospitality. And me, I know that this thing is an issue. The code says that unless the gift is trivial or inconsequential, when you say something is trivial, it means its effect is very down, or inconsequential, the gift must not be accepted. But you see, we are here in Ghana where a judge said that if you bring him a goat, he will accept it. It will not impair his judgment, because bringing a goat is greetings in the north. Is it true? Tamale, and those who are in Tamale and Boga and things. Goat, it's a normal thing, eh?
Yes, sir.
Sure.
No, not
No,
really.
sir.
It's an
The-
appreciation. Yes. See,
that
it
is
is
exactly what we are saying now.
yes.
Sir,
He's
that's
saying
The
cola.
that
point
it's a normal
It's
thing.
cola. It's cola.
It's cola. What is cola?
Yes, sir. Oh, cola is a gift given to a brother or a sister.
Listen.
You are talking about the real cola. I thought cola as in
Say.
cola. There's a term like the way they did cola increase in salary.
No.
No,
Cola.
no. It's not
So
The
you are
one
talking
name
talking
after
about the
Coca-Cola.
normal cola. Oh,
Yeah.
the one that is part of even when you are marrying somebody, you add.
Yes, yes.
So no, I'm talking about a goat. Don't take us to cola.
Yes. Uh-huh. You see,
So he's saying the goat represents the
the
cola.
fact is
Oh,
that
the goat
when it
represents
comes,
cola.
Yes, sir.
no,
Yes, sir.
no, it doesn't. That's
Uh-huh.
not northern. You
Okay.
see, we have a way to handle a guest when you get a guest.
Mhm.
Like you say, you were talking about buying somebody lunch or something. It is a
Yeah.
tradition
Yeah.
that when somebody comes to your house or to your place, in fact, even if yourself don't have, your neighbors will contribute to do it for you
The
to
goat.
have
Wow.
provide food, not good to provide food that will
Uh-huh.
make the guest feel comfortable.
Oh,
The
then that
goat
place is
comes,
nice.
goat or yam and other things comes when the person has finished with his visit with you and
Okay.
you are happy
Okay.
with the way things have gone. Then you will package those things when he goes back to where he's coming from, it becomes an information to wherever he's coming from that yes,
You
he has
went to.
visited somebody or he has visited
Oh,
you.
I see.
Uh-huh. But that is not given
Defending the
when
goats.
you are still coming to do when you are
Please, when you
when
finish,
that
send me your Google location. I will be
Eh,
paying
I'm
you.
coming, cry. Chief. So you are taking Google location.
I
The
So
am
man
if
is
it
coming.
is
defending
done
the goats.
before, if
See,
it is
see.
done before, then it is bribe.
Oh, okay,
It
okay,
is not
okay.
done before you are leaving. It is a farewell gift,
Oh,
but
okay.
not at the point of entry. It is at the point of exiting or leaving.
Oh, I see. I see. Yeah, please, when you
I
finish,
I
send Google
we
location.
can I share this experience?
Oh, you can, you can.
I once worked with an NGO and we did a project proposal and I did a budget. And just like we are talking, I indicated a budget line like protocol, traditional protocol, and it was to Danida. And the team leader from their side vehemently kicked against it and said for them, such things amounted to bribery and corruption. We didn't argue further. So when they came for inception of the project, and we went to the community level to do the inception meetings with community chiefs and people, she was following. Before you cannot go to the chief palace direct. You
You
have
have
to
to
go
pass
and
through
meet
someone.
somebody like a chief linguist. And
Yeah.
you don't go to the chief linguist empty-handed. So when you go, give something to him as scholar. And then you give something to him to be given to the chief as scholar brought by the strangers or the visitors. So she was observing. And we visited 6 communities in a day. When we came back, she asked me, so why were you doing those things? I said, "Ah, those things, when you don't do that, you won't even see the opinion leader, the chief. And it amounts to disrespecting his skin, his traditional, his custodial skin. Then she was there. So then I now had the time to, because if you were to explain to them at the point of budgeting, you could lose the project. So we had to do an amendment of the budget to now include it, and she accepted it.
Oh, that's
Ehen.
good.
So these are some of the issues when it comes to cultural issues, because sometimes the law will say this, but you go to a place, if they give you water and you even refuse to drink, you will not like the place again. They will not treat you well.
Yeah, it's true. It's true. It's true. All right. That's that. Thank you very much for the shared experience. In fact, these are the reasons why I actually enjoy this class, these kind of experiences. That's very, very true. Thank you very much. So, like we are saying, unless the gift is trivial or inconsequential, please you have to reject it. And even if you reject it, you must report it or document it in your audit paper, your audit file. All right. So that is that. All right. The last one here is about loans and guarantee. And listen carefully, because first of all, you are not allowed to take a loan from your client that is not a banking institution or a financial institution. So if the client is not a financial institution, then what you do is that first place, you can never take a loan from him. That one is not allowed. But what if it's a financial institution? So if it is a financial institution, we know that that is what they do to survive. All right. So when you are taking that loan, it must be disclosed at a commercial rate, at a commercial rate, at a commercial rate. All right. So at an arm's length rate. So that is that. In one of the master's questions we gave to the EMBA student in Legon, something like this was done. So we said that the wife of the audit partner went for the loan, and the bank said that, oh, because of the husband, he will give him a special consideration. A special consideration. So what are the ethical issues there? So that is what we laid to we put in the exam. And interestingly, you get some funny answers. Very, very funny answers. Some said that it is not the auditor who went for the thing, so there is no ethical issue. It is the wife who went for it. What would you say about that? What would you say about that? Then quickly we go to self-review.
It's an ethical issue because the wife will obviously inform the husband with respect to the treatment given to him or given to her. So,
so when the loan is taken from a financial institution, it has to be at a commercial rate. And if you take it at a commercial rate, you still have to disclose. All right, you still have to disclose it. All right, at this point, yes, any question?
Hello, sir.
Yes, please.
Please, I wanted more explanation on the contingency this thing. I didn't get it very well.
Oh, contingency means conditional. If the job goes this way, I will pay you this amount.
Okay.
If so, in that case, it's abolished. You cannot put your charge basis a fact that the way the job will go. No. So like if it is true and fair, you get this. If it is not true and fair, you get this. You will see it in the exam question most time like that.
Okay,
All right.
sir.
I have something from Solomon, very interesting. In Nigeria, for an audit, they offer cucumber and granite freely as snacks, and you have to eat it, else you have issues. You have issues. So hospitality is key, but what happens after? Uh, I, I can't get the last part. What happens after this audit is the problem. Some cash are avoidable. All right. So that is that. Okay. So thank you for that one too. I think, yeah. So if you can see the screen, that is the message he sent. So, so you people, okay. So why is it that you are in? Is it Deloitte or which firm is that? Because I know most of the audit firm has their original capital, their original headquarters in Nigeria.
So read the last listing.
The following year, when you audit them, they label the expense as auditor's appreciation. Interesting. All right. Oh, okay, that's interesting. All right.
So if you are the auditor, how are you going to react to this?
So how will you audit that expense anyway? Will you audit that expense? So what if the auditor is auditing its health insurance provider, for which its most members are on the policy? In that case, what measures do the auditor? Why that particular hospital? Why? So this is where we talked about the fact that you are doing a business relationship with them. Yes. So the same hospital, you are going to audit them. It is you have impaired. In fact, you have to use clients who are not, the team members who are not having the insurance policy with that person. Yes. So please, this one, of course, it will impair your objectivity, whether you like it or not. Whether you like it or not.
Hello, sir.
Yes, please.
Sir, please, I saw contingency fee. So if I give you an example of a contingency fee?
I think I've done that.
Is that about tax GRA? GRA. Make use
I
of
even
GRA.
use DRA as an example. So we know we the tax auditors, something we do a lot. If DRA catches you, then fine, you can pay me 5,000. But that thing I'm doing for you, if DRA does not catch you, you pay me 50,000. Please, contingency simply means condition. So any fee that is based on any condition, that is all we are saying.
Okay.
It is said that one of your problems for business students is English, and that thing we have to address that. See. All right. So basically, those are the things you will see in the question. Now, the question I gave you, did you see any of them in the case as self-interest? Did you see
Yes,
any of
please.
Yes,
that?
sir.
Yes,
So how did
please.
you understand it? That's the question. How you answered it is the question. So I will show you how you write your answer, because some of you answered it so perfectly that I asked how many minutes did you use? You say 1 hour. Now, if you use 1 hour to solve this question, that is giving you only 10 marks. How many hours left for you to do the other ones? So I will show you how you go by your answer writing. All right. So now let's look
Sir, I
at,
didn't receive a feedback.
because you chose to send the thing the time you want, not the time I said. So I will also respond to you the time I want. That's what happens. I think Emmanuel suffered from me doing the same thing. Just when I said send the thing, you won't send. Immediately Emmanuel sent. He said,
Oh, sir,
feedback.
please.
Interesting. So all those people who sent it on Saturday, you knew, you can testify that I responded to you immediately. In fact, that is what I used let me address this issue now. Let me address this issue now. So we now pay attention to self-review. A self-review. So like the word said, it's review and there is self. So you view the thing, you are viewing again, review. So that is basically it. So this is where it's kind of you did the job yourself and you are reviewing your work again. And the self means that you did it and you are doing it again. The issues here I'm going to discuss are: one, preparation of financial statements. And I think it was also in the assignment or financial record. So do you think that an auditor should prepare a financial statement and at the same time audit that same financial statement? So it's a big problem. Now, when you are answering a question on a self-review, the first thing you need to spot, and those of you who have the book, you see that I underline those things. Find out if the thing is a listed entity or public entity. Find out. Read the question well. And these are the technicalities of audit. Read the question well. Is it a listed entity or a private entity? So you need to find out the question that you are doing. Now watch this. If it is a listed entity, it is a no-go area. It is no. You are not allowed to prepare their financial statement and at the same time audit them. It is not allowed. However, if the company is a private entity, this is what the audit firm can do. They will have a department to do the preparation and another department to do the audit. So that is what is practiced. But so the carefulness is whether it is a public entity or a private entity. So be careful to check that. All right. So that is that. You are not even authorized to approve transactions. So those of you who work in audit firm, you do agree that if a client wants to pass an adjustment, you, the auditor, will see that there's something wrong with the financial statement and there will be a need for an adjustment. But you don't pass the adjustment. You ask the client to propose an adjustment. So that is what you do. Then the client will still pass the adjustment. The auditor doesn't do it. So these are what happens. All right. So that is that. Number 2 is valuation. As for valuation, you all know, you have seen it in PP. Yes, please.
Please, sorry, please, we're saying if an adjustment is to be passed, the client must propose the adjustment. The client must pass the adjustment, not the auditor. But what kind of adjustment in this respect are we talking about? If you can give example like it.
Did you do corporate reporting? Have you done
Yes.
FIO before? Have you done something called IAS 8?
Yes, that's the like the change in accounting.
Exactly. So if there was an error in the financial statement, then you are now correcting it. That is an example.
Okay.
All right.
Okay. Okay. Yo, thank you.
Now let's look at valuation. So valuation, to those of you done corporate reporting, financial reporting, you hear of this word revaluation, right? Revaluation. So who does revaluation for clients? These days, audit firms have these CFI people who are doing valuations for entities. Now, the thing is that if you revalue a PPE that was 10,000 to, let's say, 20,000, you know that there is a revaluation surplus, right, of 10,000. Now, this figure, you, the auditor who did the revaluation, you are the same person going to audit that if this revaluation was done properly. But will you even do it? Because you are the same person that did it. So you let it ride like that. So it is a review, a self-review issue. The same thing happens here. Public company, no. Private company, one department can do it. Another department can carry out the assurance engagement. All right. So take note of those things. Then the almighty taxation issue, tax. There are 4 issues of taxation. We have number 1, we have the return preparation and filing, returns filing. Number 2, we have what we call tax calculation. We have number 3, tax planning. And the last one is tax dispute resolution. As an auditor, what do you do? Are you allowed to file for your client? So we just discussed this, that yes, auditors do file, so long as the client will take responsibility of the filing. You know, in tax, when you are filing, there is a part you sign. All right. There is a part you apply your signature. There's a statement that I hereby confirm that the information that I've given are accurate. All right. So the person who signs that must be the client, not the audit firm. All right. So you can do it for your client, but so long as the management will take responsibility of that. All right. So that is that. But you see, when it comes to calculation in a public company, no, you are not allowed to do it, because when you calculate, it will be an expense in the financial statement. All right. And you will be the one to audit. So it is not allowed. But for a private company, yes, a department can do, another department can do the audit. All right. So take note of that. Tax planning. We all know what tax planning is. Tax planning is arranging your activity in such a way that you reduce your tax expense. Now, watch this. Should we allow auditors to assist their client to plan their tax very well? Of course, if it is an advice, no problem. But if that advice is going to end up putting a figure in their financial statement, a material figure in the financial statement, it is going to benefit a material figure in the financial statement, then it is no. It is no. All right. So please take note of that. It is no. But like I say, in private entities, the allowances are given. But when it comes to tax dispute, it is no here, no here, because representing your client in a tax dispute, not only a self-review, it is also an advocacy issue, and you are not allowed to promote the client business. All right. So please, as for that one, it is a no area. Then there is this last issue that happens all the time. Should we allow auditors to serve as internal auditors? Should we allow external auditors to serve as internal auditors for a client? Please, if it is a private company, no. Sorry, a public company, no. No. You must not allowed you must not be allowed to serve as like internal auditor when the internal controls. You see, when you are an auditor, you are going to audit the controls of a company. You control, and when the controls, whether good or bad, yield to material figures in the financial statement, then when you do it, it means you are doing your own job. You are reviewing your own self. All right. So internal auditors are not allowed to actually external auditors are not allowed to do internal audit service for public listed companies if, most importantly, a significant part of the internal controls concern the financial statement. You know, internal controls may not only be about financial statement. Sometimes procurement department, marketing department, and all those things. But when it is geared towards the financial reporting, then it is a no-go area, all right, unless it's a private entity, all right. So basically, that is that. All right. So if you have any question on the self-review, you can ask. Then we come to advocacy. I've already explained advocacy. Advocacy is, yes, please.
What of the issue of corporate finance?
Oh, of course, you are not allowed to do that. You are not allowed to promote your client business in terms of doing underwriting. So you are guaranteeing for your client to go for loan. Please, it's also not allowed. All right, it is not allowed. All right, so take note of that. It is not allowed. All right. Now, advocacy, when you find yourself in a situation where you are promoting the client business, as an auditor, you are not supposed to comment on your client in public. You are not supposed to promote their shares. All right. You are not supposed to represent them in any litigation. So you are not supposed to do all those things. So whether promoting their shares, advertising for them, being a guarantor for them, you are not supposed to do all those things. In fact, auditors are said to appear independent in deed and in appearance. What do we mean independence in fact or in deed? Independence indeed. Independence indeed is simply saying that when you are working, you must exercise professional skepticism, and we will talk about that. Your integrity must be apt. All right. Exercise professional judgment when you are conducting the job. Exercise professional skepticism. Then there is independence in appearance. Independence in appearance. What we mean by this is that even at the time you are coming to be associated with a client, there has to be nothing like a connection, like familiarity, a third party kind of, and issues of confidentiality too. You are using a client information for your own personal interest on another job. All these things must not exist. You must appear independent and not associated with a client in any form. All right. So take note of that. Then we have familiarity. I think this is the easiest one. You see, I always tell students, like, and you see in the case that I used in the book for assessment, whenever you are reading a question and says that there has been the auditors of the client for some years now, for some years, it tells you that they have been there for too long. Familiarity. You will see those things in the question. So they have been there with them like 6 years, this years. All right. So when you spend more time with the client, you see that let me give you this personal example. And please, it's just personal. Don't say it anywhere. Personally, when I meet a lady for the first time, I don't do anything. I want to find out if the lady will come my way another time. If it is only the first time, then you are gone and you are gone forever. That is it. But if I see that, oh, we can meet again another time, then it means that, oh, I'll trust that in another time I'll do something. So I will not do the, please, your number and all those things here. It won't happen. So the auditors come. They come. You know, this year they came. And so you do your assessment. You just assess how the person is in an office environment. Don't rush. Then the next year, when the person comes, maybe you can now think about that. If the person doesn't come next year, I forget about it. It doesn't mean do same. You can be bold. You can be bold and do what you want to do. But another thing you must be careful is that if you want to date an auditor who audits your payroll, be careful, especially the ladies. Be careful. They will audit your payroll. They will know your salary in total. And that one alone is a good basis of assessment, whether to go ahead or not to go ahead. So maybe you'll be fanboy, your salary is down. By the time you say no, it's not because of you, it's because of your salary. But sometimes too, they will say yes, also because of your salary. So be careful. All right. So the familiarity aspect is that the more you spend the time with the person, the more you are likely to have this emotional connection. In a personal confession, at a point, I used to go, instead of sitting on my desk for the audit, the two of us will leave and we go to the boardroom. Audit plus personal conversation. So it creates familiarity. That's the danger. It creates familiarity. And so if the person sees something wrong, instead of reporting to the boss, he tries to find a way between the two of you to correct the issue, maneuver to correct the issue. Because the person will care about you not to lose your job, but he cares about him or herself also not to lose his job. So the two of you connive to do something internal. So that is familiarity, and this thing impairs objectivity. In audit, there is this current issue of 666. So it means you audit a client for 6 years, you go for a cooling period of 6 years, then you come back and audit them for 6 years. The last time I was discussing with one of my good friends, his name is Kofi Odro. Those of you who know him, Kofi Odro. I asked him, Charlie, this 666 that is happening, I can see that you, the big 4 audit clients, you are transferring clients. So like Deloitte will finish 6 years, then push it to PwC. Then Deloitte will come back, push it to PwC. Like that. KPMG to connive. That is what they are doing. That is basically what they are doing. So that is what you see. All right. So the Act 992 has called out for this. So you audit a client for 6 years, you have to leave site. But I think it is fair that even with these 6 years, you change the team that goes there, not the supervisor, but the team. So you have to change the team. Other than that, by the time you finish the audit work for the next 2 years, a client has married an audit officer. Yeah, that is it. All right. So basically, that is the familiarity aspect. Yes, please.
Please, concern the corporate finance and then the loan guarantee.
It looks similar.
Yes. So if like the self-review and then the advocacy, if you are supposed to explain, how do you go
it
about
depends. If you pick it in the perspective of self-review, explain it from the perspective of self-review. You can also pick it from the perspective of advocacy and explain it. It's the words that you use to explain that matters. It doesn't mean you are wrong. Yeah, it doesn't mean you are wrong.
Okay.
Yeah, Dorcas. Are you the Dorcas also at Deloitte?
No.
All right, I'm listening.
Sir, please, my question is that with the familiarity threat, sometimes when the auditors are new, they would have to take time to, study the organizational culture, their internal control, all those things. but with time, they are okay with it. And so it helps them like do their work faster, faster, faster. Do you understand? Don't you think
I
that that's
understand.
also
There is something called audit documentation. The principle under audit documentation says that document the work in such a way that when you are not there, somebody can pick the work and continue as if he was the same person that started it. So that's what happens. So you must document. If you document properly, somebody can read. I get it, yes. You may say, oh, if you change, it will not move the work faster. I get it. That is why you have to go through your audit file to read the previous working document. All right. Solomon sent Solomon. You said what?
So say,
Review past work. Yes, that is exactly what I'm saying. You have to review past work. Solomon, I think you are in an audit firm, right? Because these things you say, you have to be in an audit firm to have an idea about that. Yes, Ima.
so say, in Ghana, how
Yeah,
many years does it
thank
take
you,
to
sir.
document?
Hello. Thank you, sir. Proud to what
Uh-huh.
my sister said. There has to be a planning. And with respect
Yeah.
to the planning, the team are selected based on their experience they have on the client industry. So issue
Yeah.
of familiarities is killing. We have to do away with it. Thank you, sir.
Yeah. All right.
Because you
Yes.
have audited a person for 2-3 years. Now they know you like Gary and beans. You like the one at the roadside, not the one at.
Yeah.
So they
Yeah.
know the food you eat.
All right. All right. Oh, as for the auditors, when you come to the office, sometimes it helps because me personally, when I was an officer, when the auditor comes, I have to do petty cash for their lunch. And my office wasn't offering lunch then. But when the auditors come, if the auditors are 5, I use 6 people because how can I feed them and not feed myself? So I always use 6 people and I put myself as part of the auditors. We all enjoy free lunch. Yeah. Yes.
Sir,
Yes, please.
this is one thing that relating to gift and hospitality. It's
Uh,
something you don't do for your staff, but auditors you are doing for them.
uh, uh,
You see
but
some of these things. So
they
if the
say it's
gift
cooler.
becomes something more, it becomes something more of value. They are in compromise.
I mean, I pray that when they come, they don't leave. 2 months, they should be there. So I will enjoy lunch 2 months.
That one
Yes.
is true because sometimes you see the audit expense and you ask yourself, into way, midi way, did I actually spend this? You ask yourself, because we went for a place and they said they are getting us lunch. We were only 4, but from a distance, I prompted my team leader, shit, just look at this big bag they are bringing. So does it mean all this lunch is for us? They're also going to eat from it.
Oh, of course. Yeah, Dorcas.
sir? Please, this is a different question with regards to the gifts and say, what if the gift is not material, like the food?
And we
Food is not
said that
material.
now. It's trivial and inconsequential. But you see, whether material or not, who determines the materiality? It's always a matter of subjectivity. That's why the guy Mohammed explained to us, like some are traditions, so you don't read more than meanings to it, like a bribe or anything. All right. So it depends on the size of the gift. Okay. So that is that. You said food is not material. It's not material to the auditor. Go to those working outside and see if food is not material. So it's a subjective thing, but like we are doing audit, so food is normal. All right. It's normal. Yeah. But you see, like I'm saying, if the auditors don't come, I'll be chopping gobe. But the auditor come, you don't buy gobe to the auditor. You order from Star Bites, and this one, this way, this one. So that one is an opportunity for us to also eat from those places. But it's normal. I mean, it's normal. You, Gloria, why are you an auditor? And it's just that it's like we are preaching that you should not collect your food again, Abi. All right. Anyway, so that is that. Then let's talk about the last one, intimidation. Intimidation. Intimidation comes in various forms. The most ones in the exams is always a threat of dismissal, intimidation. All right, the threat of dismissal. And in the foreign land, some intimidations are very funny. There is one question that we did before in some sessions where the question said that the guy give them this thing, that ship, yacht, or how do you mention it? Yacht or yacht?
Yacht.
Yacht. All right. So the auditors, when they come, he's a big businessman, so he makes them spend some time in his yacht. But the next time they came, he said that these days the way they do the audit, it doesn't go the way he wanted. So he won't give them the yacht. He will let them sit at some recreational place, BKK, and there will be some balloons that will be doing tito on them like normal. And in the foreign land, this is intimidation. You are trying to intimidate them to do the work in such a way that they will spend the time in the yacht. So that is how it is. But Ghana, yacht, where are you going to find it from? So that is it. But in Ghana, so our exams has always been a threat of dismissal. Like if you don't do the job in this way, we will dismiss you, or we will not give you this extra job. All right. In my personal experience, this is the most intimidating. My boss is a Nigerian. Now, the Nigerians, when they want to intimidate you, they intimidate you very fine. Like you are discussing, we are just discussing. Maybe a new team came, and so they need to familiarize themselves with the company's culture and this. And we also discussed that they must put the information in the audit documentation, the audit file, all right, so that the new people that are coming will read. So we had a particular case where the new people came. They also came to ask the same question that the old people asked about the company organization and this. But we believe that if you're a proper auditor, this information should be in your permanent file. And you are coming to build a current file. So you should have read about all these things before you come. But the lady came and she was coming to ask the questions all afresh. Then my boss found it as a nice opportunity to intimidate the lady. Show superior knowledge. That is another form of intimidation. So he goes like, didn't you school as an auditor? Is it that you don't know that there's something called permanent file you are supposed to read all these things from? So once he's bashing the lady like that, it is kind of reducing her confidence. So the next time the lady has a question to go to my boss and ask, she's afraid to ask. But maybe at the time, there is something wrong in the financial statement. She needs to ask and get clarity of. But that is what he has done. He has done to the lady. And that is a huge problem. So like Solomon is saying, team discussion with past auditors, solve asking some questions. Yes, but here is the case. This lady came and started asking the questions again. So my boss used that as an opportunity to diminish her confidence. So he intimidated the lady. In fact, the lady never found happiness during the audit again. So you see, this auditing, before you step into the client office, a lot must happen. And we will discuss that in the audit plan and strategy. A lot must happen. A lot must happen. All right. So basically, that is that. Now, quickly, let me do this part. Then we can see how we will take a short break. Then we'll come back. Practice the way on the question. So I will skip the professional aspect for today. Now, we said that after you have done the SSAFI, there is confidentiality. The second issue is the confidentiality. Now, what is confidentiality? Here we are talking about the fact that it's kind of a little bit of secrecy, such that you are not supposed to disclose or use information that you obtain on a client for your personal interest. All right, for your personal interest. Anyway, if somebody is intimidated, it's better you remove the person from the team. All right. Okay, so that is that. And you must report intimidation to your office. And even if you have to report it to the regulatory authorities, you can do. All right, so that is that. Now, confidentiality is only applicable. Now, listen to this. Confidentiality is applicable in your exams when the auditor used to work for company A and it is now working for company B, but has to use information he gained here over here. That is when you use confidentiality. Take note of that. So he was in one company, he moved to another company, but he is kind of using information he had in the previous company into the other company. So that is when you apply confidentiality. Please, confidentiality, you are supposed to keep the thing confident unless you are legally required to release the information. Because if the thing is in public interest, somebody is doing money laundering, you don't say that you need permission. You have to report it. All right, that is that. Other than that, the others, you need permission. So we have required disclosure and we have permitted disclosure. Under the required, it means there is something that is of public interest, all right, that everybody must have the information about. But permitted disclosure, you must seek permission from your client before you can use it. That is the situation you apply confidentiality. So don't go and apply confidentiality in the SSAFI issue. Apply confidentiality when the person was in one company and now is in another company and has to use information he used to have here into the new company. So take note of that. Your safeguards are that sometimes you have to seek permission before you disclose. If it is a required disclosure, you have to report it to the regulatory authority, or you can seek legal advice without compromising on confidentiality as to what to do. All right. So basically, that is when you apply confidentiality. Then the conflict of interest. Please don't confuse conflict of interest. Yes, Dorcas.
Sir, please, with the confidentiality, I read from somewhere, like it was the question, that the man was working in a public firm, a public hospital, and then he left to a private hospital. And there was kind of a department, they wanted to give it out to a private, let's say the dental section of the public hospital, they wanted to give it out to a private firm. Okay, and so they wanted the man, because he has been there, he knows the reason.
Yes.
So this one, if you are like writing about it, how would you explain it and then write it?
Yeah, so I wanted to finish, then I show you how you write your answer, all of them. All right. So it's okay. Yeah. In fact, this question that you are talking about may not even be audit. It may even be corporate reporting. And it may even be in case study, like somebody has also said here. So corporate reporting, we do same thing over there. So you use confidentiality. Now, in those cases, I wish I finished, then you take the break and come, then I show you how you answer the questions. But with this one, the quick one I can say is that so the guy must actually tell them that, you see, there's dicey. So you can actually tell them that somebody should front the thing so that you can be out. But if you still want to front the thing, then it means that you have an ethical obligation not to use the information that you had when you were working there as an advantage. All right, that is the dicey thing, and I'll come to that. I think I want to do more on that when we are solving the questions for real. But it's a very difficult thing. In some questions, they will even tell you that he signed the confidentiality. There's something you sign when you are leaving a company or when you are employed, that when you leave, you will not
Oath of
use the
secrecy.
information. Yeah, oath of secrecy. Yeah, there's something that you do, but it's a general oath of secrecy. It doesn't give you specific that you should not disclose A, B. It's a general one. So you have an ethical obligation as to not to use those information. Yes, you have an ethical obligation not to use those information that you had in your previous job to as an advantage. So it's either you take yourself out, or you have the ethical obligation not to use the information. And even if you want to use the information, this is where you require disclosure. All right, you require disclosure. So that is the issue. So you see, like I told you, I always tell you, it's the way you write your answer. There's no right or wrong answer. The objective is to get the higher mark. That is it. So it's an audit. Me, I mark audit papers all the time. When you are marking, you don't give somebody 0. It doesn't happen. No, because the person has written English. If the English is not something you like, you just put there 0.5. That's all. But my own is to teach you how you get maximum mark. So I'll do that. I just want to finish this thing, give you some break, then we come and conclude on how to write your answer. All right. So now let's do the conflict of interest. Please, when do we apply conflict of interest? We apply conflict of interest when the auditor is auditing 2 competitors. So let's say Samsung and Apple. So it's not self-review, neither is it self-interest. When you are auditing 2 competitors is when you apply conflict of interest. So now, when it happens like that, what is your safeguard? Your safeguards are plenty. They are plenty. So what you can do is to say that, oh, I will use separate team. You can use separate team. So team A, team B. Team A go to Samsung, team B go to Apple. When you do that, you must do what we call a Chinese war. All right, so that team A and team B don't meet together. Because the truth is that what benefits Samsung is a disadvantage to Apple. And what benefits Apple is also a disadvantage to Samsung. So you don't let the team meet. And if you're afraid of that, then use separate office. Let Deloitte Nigeria do Samsung. Let Deloitte Ghana do Apple. Of course, one of the safeguard is also that you will inform them. You will inform them that you are the same person doing the 2. So either if they are okay, then they are okay. Again, you must be stringent on confidentiality. You must be straight on it. That's why the Chinese war is very, very important. All right. Another thing is that you can decide to resign from one of them. But I always tell students, if resignation is your only answer, then you are basically saying that you are killing your audit, your firm. Yeah. We can resign from one of them. You can even resign from both of them. Yes. All right. But interestingly, I think you should do the 2 teams, the 2 offices, the Chinese war. All right. So basically, that is that. That one will help you more. All right. You can sometimes even let an independent audit firm review what you do. All right. So that is that. Then the last one is conflict of interest.
Say, hello, say.
Yes, please.
Hello, say.
I'm listening, please.
Okay, please say. I'm at a conflict of interest.
Mm-hmm.
So what would the Apple be doing and the Samsung also be doing that the center of conflict of interest? Because you have to audit this person and you have to audit this person, or
they are doing their business.
Yes, or the fear of the yes. Or the other parties or the other firms feel that the auditor will be exposing some of their secrets.
You don't think that when the auditor finds out that this financial statement, these guys are doing well in their financial statement, there are certain disclosures they are seeing, the nature of their customers, where they are. If the people here gets to find out, they can use it as an advantage for themselves.
Okay.
It's possible. In fact, it's very, very possible they can actually do.
So, so in that case, is there not anything to check the auditor in order not to? Because they are also
we are discussing so that it won't happen.
Okay.
So use separate teams so that give the Chinese war, use separate offices so that you don't put yourself in a situation where somebody can even come and steal an information that will later fight you. All right. The last one, then we go. This one, we are talking about the integrity of the client. Here we look at laws and regulations. And I gave this one. This was in the assignment of the AA people. Then law, fraud and error. It's a very simple thing. See, what you should understand is whose responsibility is it to ensure that the company abides to the laws and regulations? Is it the auditor or the client himself? And whose responsibility is it to ensure that fraud and error is minimized in their office? Whose responsibility is that? Is it the auditor or the client himself?
The client management.
The question again. Your voice was going down, please.
I said, whose responsibility is it? Whose responsibility is it to ensure that law and order is abided and fraud and error is also minimized in the entity, the client?
So the management.
Is the responsibility of the client.
So the management.
Please, the word management, I prefer if you say those charged with governance. I think I've said that thing and time again. When you say management, who do you refer to as management? Because we did corporate governance. So don't confuse the two, all right? So it is those charged with governance. They are supposed to ensure that laws and regulations are abided by. It is their responsibility. But why is the auditor interested in it? This one is ISA 250. This one is ISA 240. The auditor is interested for these reasons. If you don't abide by the laws and regulations, it can affect going concern. And the auditor needs to comment on going concern. It can also affect IAS 37 provisions because let's say you don't pay your taxes. GI comes to find out. You'll be fined. So all these things affect, what standard is this? Going concern and provision, what standard is that? What accounting standard are these?
IAS 1 and 37.
IAS 1. All right,
37.
so that is that. What about fraud and error? Which accounting standard?
IAS 8.
IAS 8. Yeah, good. I need this thing you are doing because when we get to how to answer your question too, that's
Hello,
how.
sir.
Yes, please.
Hello. Sir, please, those charged with governance, is it referring to the shareholders or
Hi, were you in
the?
class last week?
No, I joined late.
Me, I won't answer this one. Go and watch the video. Other than that, you won't go and watch the video.
Okay.
I'm not wicked. I'm not playing wicked on you. I'm helping you. Go and do that. If I answer you, you won't go and do it. So go and do it.
Okay.
All right. So that basically that is that. Now, what happens is that the auditor has a responsibility because the thing is that in ISA 315, it says that the auditor must have an understanding of the entity that is going to audit and the industry he is supposed to. So number one is that the auditor must do that, understand the entity he is going to audit. Then number two is that he must obtain sufficient appropriate evidence that the entity complies. So he must do that. He must do that. Because the compliance of the law has effect on the amount on the financial statement. So he must do that. Then in his audit procedure, he must make inquiry, obtain written representation that the entity actually obey the laws and regulation. We call it written representation. We will talk about that as we move on. Then after these things, what happens is that the auditor must report if there is any breach. So report. So one, understand the entity, obtain sufficient and appropriate evidence that if they comply through obtaining written representation from the management. This one comes from management. All right. Now, then he must report any breach. But the reporting, there are levels of reporting. If as a common officer is doing something, who do you report it to? You report him to the supervisor, in this case, the management. But if the management is involved, who will you report it to? Is it not the directors? And which part of the directors do you think we report to? Which
The
part
audit
of the
committee.
director? Audit committee. Very good. Then if you think these people are all involved, then the reporting must be to who? The shareholders.
Shareholders.
If the thing goes beyond shareholders, then it means you are looking at the regulatory authority. All right. So that is how the reporting will be. Get the understanding, obtain evidence, get written representation to back it up, then report. So that is the procedure. It is the same thing under fraud and error. So it is the management, or let's say those charged with governance job, to ensure that there is no fraud and error. All right. Now, the fraud and error also affect the financial statement. It is said that the auditor must assess. When you see, anytime you see this word assess, it means what is the relationship between something, in case of the fraud that happened, and the financial statement. Which part of the financial statement do you think a fraud will affect? If they stole inventory, is it not IAS 2? If they stole cash, is it not IAS 7? So that is how it affects the financial statement. All right. So that is how it affects the financial statement. So you will do that. You assess it. So in terms of fraud and error, we have fraudulent reporting. We have misappropriation of assets. I saw one government official using government car, taking a national service lady who is not even related to her to his destination on a weekend. And I kind of know the person. So I asked myself, hey, so the taxpayers' money too, this one too, it does it. It does this one too some. God will bless all of us. So you have to make sure that and in this case, the fuel that he is spending will be the expense in the financial statement. That's how it will be. But auditors has responsibility to ensure professional skepticism. Please, professional skepticism, the best example I can give you is that even if your pastor is the one that prepares the financial statement, or your imam is the one that prepares the financial statement, still query it. Don't say they are highly ethical. Nobody is highly ethical. Even if they are highly ethical, they don't know IAS standards. So you have to apply professional skepticism, ask questions. We will do it so you understand it more. Then again, you have to plan your work well. Plan so that you can know the risky areas. Then the last one is the reporting. So what I'm saying is that do professional skepticism. You may add assessment, assess the issue, assess it, plan. All right. Then also report. The reporting lines is the same as this one. All right. So ladies and gentlemen, this is ethical issue. The thing. I'm going to just give you a 10 minutes break. Then when you come back, I will just show you how we answer audit question, just how we answer the ethical questions. All right. So yes, not only question in mind, it means be alert to misstatements, have a question in mind, and critically evaluate the evidence. It means three things. So this is just one of them. All right. So basically that is that. We will do that because it's part of the professional issues. So take a quick 10 minutes break. We will resume here. It is in my time 10:43. So so it is a very short thing I'm going to show you. So a very short thing, just how to answer the question. All right. Then we will be done. All right. Thank you very much, and I will see you. So the 10 minutes break, we should resume at 8:55. All right. Thank you. So with the 5 minutes, we do such, and we will be done. Thank you. So how do you answer ethical questions? So answering ethical. The truth is that the ethical question will come for you to discuss the ethical threats. The ethical threats. and keep the safeguards. So that is that. And whether you like it or not, this is a 10-mark question, because the essence of the new syllabus is ethics, governance, and sustainability. That's the essence of the new syllabus. It cuts across all the courses. So now, when you are answering the ethical questions, number one, identify the ethical threat. Identify the ethical threat. Or the issue as a heading. Or the issue as a heading. So that is what you do. You need to identify the ethical threat or the issue as a heading. What do I mean by that? Example. When you are able to spot that the ethical threat is maybe a gift and hospitality thing, you can decide to say, number one, self-interest threat. Or you can say, you can write the heading as gifts and hospitality. So you can choose to say any of these. All right. So you know that, oh, if I found out recruitment, it was under self-interest. Okay, so I'll put it there. If I did financial valuation, it was under self-review. I'll write self-review, or you would quote valuation. So whichever one you want to do, you will do, but that should be a heading. So example, so you write self-interest threat. And I saw that some of you did it in the assignment. That was very good. So in fact, almost all of you, apart from one person who didn't do that, almost all of you did that. So that is good. So you write self-interest rate, and this should be one line. It will take the first line. All right. Then once you are done, do you know why this thing helps? Because honestly, when you are marking these things, the moment you see that the students have written self-interest rate, you do this and put 1 mark there. Yeah, because immediately you know that, he has seen it. That is how it is. He has seen it. So you mark there, you mark it 1 mark. You just put that in there as a header. Now, number two. And anyway, before I give you the number two, the maximum amount of time you should spend in answering this 10 minutes question is 15 minutes. All right, 15 minutes. Okay, so number two is that you explain the issue. So let me just even put it that way. So you say, you start by writing your explanation. So explain the threat. The threat linkage from the question. What do I mean by that? And I'm going to explain that one to you. All right, I'm going to explain that one to you. So what you say is this. So self-interest. How do you explain? This is how you write it. There is a self-interest. There is a self-interest threat because. So you can use the conjunction because, or you can use due to the fact that, owing to the fact that, by reason that. So everybody can choose which one to write. So because, then you go and pick the particular line in the question that makes you believe that there's a self-interest rate. So if it was a share they were owing, then you write that they own, then you write that. pick it directly from the question, not what you think elsewhere. Don't go and do a gamma lizard. Pick it directly from the question. So there is a self-interest threat because, pick it directly from the question. Please, don't waste your time going to explain what a self-interest threat is. Don't waste your time. Don't waste your time. Because I saw that some of you did that. You first explain what self-interest threat is, then somebody did that, but couldn't reflect it in the question. You couldn't pick what particular statement in the question that made you believe that there's a self-interest threat. So you pick the line in the question that makes you think there is a self-interest threat. Please, have I made sense?
Yes, sir.
Yes,
All right.
sir.
All right. So you pick that. Then when you pick it, line 3, the third thing is that conclude that it will impair the objectivity. The objectivity. All right. That is where I said before that you have to tone it to the line that it will impair the objectivity. All right. So you see, this one is one heading. It's one. There is a self-interest threat that blah, 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 blah. And this will lead to the impairment of the, all right. So that is that. By the time you finish writing, you have written like 3 lines. And it is okay. Because don't forget, apart from that 3 lines that you have written, you are going to add maybe an extra 2 lines. But that extra 2 lines is going to be your recommendation of safeguard. Recommendation of safeguard. Of safeguard. So let's say, for example, the issue, is it Gloria or somebody asked about the confidentiality? So you say that there is that one, you say that there is an ethical issue of confidentiality. So your heading can be confidentiality. There is an ethical issue of confidentiality because there is a potential issue of the person who was employed in the other company using the information that he had before into his job when dealing inside the other company. So if he has signed an oath of secrecy, you can count on the oath of secrecy and say that, oh, although there is an oath of secrecy, the oath of secrecy wasn't specific to this particular activity, yet the person has an ethical issue of or ethical responsibility of confidentiality, which, if not adhered to, will lead to the impairment of their objectivity. So that is how you write it. That is how you write it. Then safeguard. He must disclose, all right, or he must seek permission from his former employer to disclose the information he had to his current employers. If it is required, it is required to disclose to the authorities. If it is any of the self-review threats that we did, then the same procedure. So please, that is how you structure your answer. There must be a heading or a title, which will take 1 line. Explain the threat, linking it from a statement in the question. So it's a quotation of verbatim thing. You can paraphrase it from the question, but my point is that it must come from the question that is in front of you. All right. So then you conclude, then you add your safeguard. Just before you go, let me see this.
So please, if there is an exceptions, I supposed to state it.
Exceptions? What exceptions, please?
Like pertaining to the scenario given or the case given, and there is some exception that you can state it to justify your answer.
Give me an example of that exception.
So for example, like the self-interest threats. Like if an auditor performs an administrative responsibility towards the firm
If the auditor
or the company. perform administrative responsibility. But
hello. Oh, that's sad. If you can come back, let's look at this practice question, the July 2023 paper. Now, it says that you are the audit manager of Nda and Associates, whose client portfolio includes ABC Credit PLC, which is a listed company. So have you seen how, you see I've underlined the listed company, a listed financial institution, offering loans. So the word listed is very important to both commercial and retail customers. You have received an email from the audit supervisor who is currently supervising interim testing of systems and control in relation to ABC Credit for the year ended 31st October 2022. The email gives the following consideration. One of the audit team members, Obiba JK, has provisionally agreed to apply for loan from ABC PLC to finance the purchase of a domestic residence. The loan will be secured on a property, and the client business manager has promised that Obiba JK that he will ensure that he gets a very best deal from the bank with the bank can offer. So this is the question we got from the EMBA student. So that is that. Number two, a payroll manager of ABC Credit has asked the audit supervisor if it will be possible for Nda and Associates to provide a member of staff on secondment to work in the payroll department. The payroll manager has struggled to recruit a new supervisor for the organization main payroll system and wants to assign a qualified member of the audit firm as a staff for the initial 6 months. Assess the ethical and professional implications on the issues raised in the audit of ABC and the actions to be taken. All right, so this one, and you see, yes, of course, I provided you how you write your answer as usual. All right, so you realize that they are about, you see the 4 stages that I've taught you, you realize that they were all applicable in answering. All right, and I've also stated that please take note that the other 10 marker question can come from the other areas that we will discuss. We have not discussed it yet. All right, so that is that. So now look at how we answer the question. So how do you answer this question? Number one, I said that you have to identify the threat heading. Which one do you think is this one? One of the audit team member has provisionally agreed to apply for a loan. Which threat do you think it falls under?
Self-interest.
So, but if you don't want to write self-interest, you can also say that ABC Credit to finance or Obiba JK agrees loan. So you can use loans from clients. So you can heading it loan from clients.
Loans and advances.
Yes.
Okay.
So you can use any of those 2 statements. All right. So you can use that. Then when you finish, what makes you think that that is an issue? What makes you think? So you have to copy from it. So you see that, of course, you know, you can decide to go that you see this word due to the financial interest the audit team member of the audit team member in the client. Now you realize that now. Okay, I don't know if the exceptions like this one is what you are talking about, like what I see, what we are discussing about. But the point is that you must talk about you see, this providing a loan, you must talk about it just as it is in the question. You can quote verbatim or you can paraphrase. So if the loan deviates from the normal and it creates, all right, it creates. So you can also decide to write it this way. you can say that there is a self-interest threat owing to the fact that the loan that, like we said, you can take the loan. It is not a threat when the loan is taken on a commercial basis, like a commercial rate basis. All you need to do
at an arm's length.
At an arm's length. But you have to, you see, this question never said it's an arm's length, but it gave you a clue that he will give it to him on a special something. You saw that? Yes.
Yeah.
So you are going to make that hypothetical statement that if he gives the loan that is not a commercial rate or at an arm's length rate, then it's amount to a potential what? Self-interest threat, a financial interest. So it's a self-interest threat. So number one, you quoted self-interest. Number two, you have quoted the fact that you have linked it to the story. You have linked it to the story. Then number three is that you must conclude by saying that it will impair the objectivity. So you must talk about the fact that this thing is a threat to the independence. You must talk about it, and it's either you say impair objectivity or it affects independence. It depends. That part of the English you can write it. Then the last part is the part where you talk about the fact that safeguards A and B is what he can do. So in this particular case that we have in this story, the safeguard what safeguard can you give? So if it is should he drop the loan, or he should take the loan and disclose it? What do you think? So, like I said, if he's taking the loan, of course, if he's taking the loan, it should be at what? Arm's length. Yes. But if it is not an arm's length, then he shouldn't take the loan. And if he takes the loan at an arm's length, he must still disclose it. So those are the issues that you write. All right. So that is that. And if you take the second one too, you see.
But sir, can you say that member should be removed from the team?
Should be removed from the team.
Yes, you can say that. We spoke about that. That is it. We spoke about all these things. So you can do
any work done by such member also has to be reviewed.
Exactly. So you can say all those things. This one too was another one that he is supposed to recruit. They are recruiting a staff of the audit team for their payroll department. So I mean, we've done all these things, but I mean, my focus is how you write your answer. So this is it. So go through this 4-stage procedure, then write the answer for me. Now let me ask you a question. Did you do this thing in the solutions you sent to me? Those who send solution, did you apply this one?
Yes, sir.
Okay. So we have not looked at yours, but the others, you apply some, not all.
I say I apply some.
Yes, you apply some, not all. And to some of you, I responded that I've realized I need to do this one, like show you how you write this. So you see, this is the danger. I could have been teaching you and teaching you and teaching you, thinking that you really understood what I have done, and you will do that in the exam. Because listen, I've been doing this job for a while, especially this audit. And like most of you know that this is not your only center I do this. I do it places. There are places I've never had a failure before. Everybody passes. But those ones, normally, it's face to face. So that is what happens. So that one, I get the time to give you assignment. You write it in your exercise book. You give me. That one is everything is physical. But you see, I'm taking the pain to apply this thing in an online class where you do it, scan it to me, then I will do that. So I will do the same thing. I'm just trying to replicate the thing so that it benefits everybody elsewhere. That is it. But you see, if you decide to say that, I didn't do class with you, and you don't find this exercise as important, then I can as well meet you, do what I want to do, hoping that you can go and do that in the exam. But I am not sure about it. But ladies and gentlemen, the truth is that when you pass, it is hallelujah to me. Even though you are passed, you are saying, thank God, thank God, thank God. Me too, it same applies to me. It's pride. It's pride. All right, so that is that. Question, you said that, can he be given an audit session which does not relate to the notes and loan receivable instead of being sent out of the audit completely? Oh, you mean he should be diverted from that other thing? If it is with the same bank, the same financial institution, it doesn't matter the diversion, no, Solo. If it's the same institution, so let's say he was doing loans and advances part of the bank's financial statement, then you say you should go and do something like maybe banks don't have inventory, maybe their assets. You realize that asset was part of the collateral too. So how, when you take him from that one to go and audit expense, he is taking the money from them. So I mean, you will have to do anything. The bank said they will do something special for you. You won't do something special for them.
You do.
Yeah,
You
so that
scratch
is
my back and scratch your.
yes, so that's the danger. All right. So that is that. So the best way is to, I mean, not take the loan, divert, take the person off, or whichever way you do it. All right. So that is that. All right. So ladies and gentlemen, this is how we go about it. Now, the next time we meet, I will let us practice together. Like we will solve it together. All right. So
Okay.
you share your opinion, we do this, we do that. And that is how you develop the skill, all right, for answering the question. All right. So thank you so much. I know you are tired. Tomorrow is Friday. You want to go and do the last aspect of the week. But thank you so much for staying to this point. Thank you so much.